Welcome to the daily update, where I'll go over the action in the market for Wednesday, February 7th, and then we'll see how things look for Thursday, February 8th. We had an update. The weakness that we've been watching, that's still there, and we want to keep an eye on that. The longer term negative divergences, they're still there as well. We want to keep an eye on those. But we have to follow price, and it continues to go up, and we're getting really close to that 5,000 level for the S&P 500. It did close at an all-time high, but we'll have to see. This is a big deal to hit this big round number like this, if we even get that high. And the financial media is going to go all crazy. That's what they're going to love to talk about, but we're going to have to see, how does price react? There's probably an awful lot of stop orders placed at 5,000 or a little bit above. If we get there, that could produce some real gyration. If we do continue to go up, we're going to want to watch volume to see if that really picks up as we cross above that level as well. Now, I need to qualify that by saying we may not even get to that level. We're not there yet. We're just a few points away, but you can't really count this until we actually close above that. We may go above it intraday at some point and then come back down. As I've been saying in the videos, way back when I first started, they wondered if the Dow was ever going to get over 4,000. It actually got up to that level, even went above it one or two times, only to come back down and close below it. So it's going to be the closing value that we watch if we get to that point. So let's go back and talk about what happened. Right at the open, we had a gap higher open. The futures were pretty positive. Now, the reason why this is more of a gap is that Tuesday session was so comatose that the pivot points for Wednesday session were so close to each other. We just shot above the daily pivot, R1, and I even had to put R3 onto the chart. And so that makes it look a little more pronounced than really it was. But R2 was at 49.72, and then we climbed up to R3 at 49.95. Again, closer to that 5,000 level. Then we stayed below R3, but we didn't really drop back. And we just kind of chopped along sideways. We tried to get above R3 a couple of times, but it just wasn't happening yet anyway. And we ended up closing just about at R3. We were up 0.82% on above average volume. Now that is encouraging to have an up day, to get near the 5,000 level and to set a new all-time high. Now, it wasn't a huge increase in volume, but still it came back above average, where in Tuesday's session we were below average. We are positive, but we have to watch this overbought condition. But as I've also been saying, we can stay extreme positive for an extended period of time. Usually when we're going down and we start to become oversold, that's where you get a nice little bounce up after you have some more of a critical mass type climactic price decline. It doesn't always work that way at the top, where this can go on. We can have more rounded tops. We can go up, sit at a pretty high level, and then kind of work that off and then go back up again, because most of the stock market is geared to buy low and sell high, where they're panicking on the way down, but they're just kind of riding things as we get to higher levels. And we're still keeping an eye on inflation and interest rates. We're not getting an awful lot of economic data that's really going to help us with that this week, but that's still in the background at all times. And then we're keeping an eye on all the different geopolitical events. And as I've also been saying, they don't seem to have a real impact right now on what's happening in the stock market. Some comments that we can make. We're just under 5,000 for the S&P 500. The NASDAQ 100 and the S&P did set new all-time highs. And there's a lot of mega caps in both the NASDAQ 100 as well as the S&P. They're in both indexes. And so when you have one looking stronger, that also helps the other. And that's why we watch some of these other indexes, because they do impact each other. The mega caps outperformed, and that's where the real strength has been coming from over the last year to year and a half now. But back in 2022, this was where all the weakness was coming from as well. This was leading the market lower. Then we're keeping an eye on New York Community Bank. It's been down heavily last week and so far this week. Well, finally, it saw a bit of a bounce. It was up 7.1%, and we're watching a chart of that. I'll have that later to show you. Moody's came out and downgraded their longer term rating to junk status. That's not a good thing if you're a bank, and banks are considered to be safe. And all of a sudden they come in and say, you guys have pretty risky stuff. And during the day, the shares were down as much as 14.3%, an additional decline. And then it really started to make a comeback, ended up closing up on the day. So you might have some short covering that was going on there. Also, we had some federal open mouth committee that came out and gave a few statements. Minneapolis Fed President Kashkari, who's not a voter any longer, said that 2 to 3 rate cuts this year are appropriate based on what he knows now. Okay, that's very market friendly. They pretty much, now this isn't Chairperson Powell, but this is a person on the FOMC who has come out and said this. So the market has a little bit more justification to say, okay, it looks like there are going to be some rate cuts. And then Fed Governor Kugler, who is an FOMC voter, said that the current target range for the Fed funds rate may need to be held there for longer if progress on disinflation stalls. So this was kind of out there to counteract a little bit of what was stated, that Kashkari comes out and says, yeah, it looks like we're going to lower rates. And then Kugler comes out and says, well, we might not be able to cut rates right now unless we see inflation really continue to go down. Then, on a short-term basis, our list is getting a little bit longer with the up day. We have the Williams percent R, the CCI 14 and 20, the stochastics, our standard deviations chart, the boom indicator that's showing that we're kind of getting far away from the 20-period moving average, and then the RSI based on 9 periods. Also, not as long, but still, we need to take note of the intermediate term extreme positive readings. We're still keeping an eye on the oscillators. And I just have the PMO here, but I'm really including all of the oscillators that we're looking at. The Sean trend meter, the bullish percent index for the NASDAQ 100, it still has not dropped down below 70. And so since it's above 70, it's extreme positive. The money flow index, the boom indicator based on 50 periods, we're getting kind of far away from that moving average. The longer term RSI based on 14 periods instead of the 9 periods that's in the short term. And then our new high, new low steady, which this has pretty much been this way for all of 2024. And we're back to getting a little extreme again with our longer term moving averages, the 150 and the 200 simple moving averages. And we're still going through this same scenario that it looks like, at least we've heard now again, that the Fed might be done raising rates. So the takeaway from what both of these folks said earlier from the FOMC, they're not talking about raising rates. They're saying we're either going to keep rates where they're at, and we might look at cutting them at some point down the road. So that is more positive if the market is continuing to look for rates to end up coming down. We've pretty much taken March off the table. Now the market is looking to May as a possible time when, if rate cuts do happen, that may be about the time when they could occur. And then the dollar was down and interest rates were up. We actually ticked up a couple of notches. We're at 4.11% for the 10-year yield. The yield curves that we follow are still inverted, and we're now getting extreme positive with our sentiment. We had been at 73. We're back up to 75 again. 75 and above is where we're getting extreme positive, and this is when we want to keep in the back of our mind that this should be used as some kind of a contrarian indicator, or at least be open to that possibility. Now, we could still go up from here. There's more numbers higher than 75, but we just want to know that this can be kind of a dangerous area. Our trend, it's looking a little more positive. In the short term, the ADX is starting to go back above its moving average, and the green line's on top. We're kind of on top to slightly going up in the intermediate term, and the green line's on top with that chart as well. So we are switching back to a more of a strengthening trend, and that trend is positive. And we're above 20, so that's still suggesting that we're in a trending environment. Our bias is positive with the up day, and our momentum still continues to be positive. Bias is usually one day, where momentum is the last 2, 3, 4, 5 days taken together. We did get some economic reports, not real influential ones, but we saw the MBA Mortgage Applications Index. We get this every week, and it was up 3.7%. Refinance applications were up 12%, where purchase applications were down 1%. And then the trade deficit, I didn't have that on the calendar. This used to be a huge deal to the market. Now it's like, what? This comes out, well, we know it's going to be negative. How negative is it going to be? Well, it came in at a minus 62.2 billion, a little bit more than the minus 62 billion they had expected, and up from the 61.9 minus billion that we saw last time. Consumer credit came in up 1.6 billion. They had expected it to come in at 16.3 billion. That doesn't make sense. Last time when we got this report, it was at 23.5 billion, but it has been decreasing overall. Here is the chart. Here's the mortgage applications, where they were up 3.7% on the week when you take them all together. We are coming down a little bit with our trade balance, but it's still negative, where we've been kind of wearing that off lately. And now when this is going down, that means the minus number's getting bigger. And here's import and exports, which are actually increasing just a little bit. This is showing that trade's going back and forth. We see the imports, which is the yellow line, that's kind of flattening out, but it still has been going up. And the blue line are exports. That means we're sending out things more to other countries. And that's a pretty healthy sign. We want to do trade with other companies, whether we're sending products to them or receiving products from them. And here's the trade deficit, where not an awful lot of change, but it's always coming up with a negative. We always are bringing in more than we're sending out, since the U.S. economy has switched from being a manufacturing economy over to a services economy. And then consumer credit on a year-over-year basis does continue to decline right now. And here's the change, where it was up, but not up as much as we saw in the previous reading. Then just a couple of charts here. This is consumer confidence. This is put up by Real Investment Advice. This is a historical chart. And what we have are the different things that have happened here as far as confidence. That's the red line. And you can see when these bad things happen, then the confidence tends to really go down as well. And then we've paired that up with the S&P 500 here, just to see how price and these different events end up actually impacting each other. And then here, this is the consensus earnings per share. And I have to move this around a little bit. It typically gets cut through the first for the fiscal year going forward. What we're trying to do here is compare the historical average, which is the yellow line. And this is common. Analysts come out with their projections, and then as they get closer and closer to that becoming a reality, they tend to lower these forecasts. And that's, you're really optimistic when you're looking way out into the future, but as the day approaches, you have to become really more realistic once you get closer. And then the dark blue line, this is what happened in 2023, where we were seeing a decline here. And this lighter blue line, this is so far what has been happening in 2024. Here's our intraday chart, where because of Tuesday's session really having such a narrow range, that's why the pivot levels were very close to each other. And we shot right up to R3 immediately. And we just hit that level and we stayed underneath it. We tried to bounce a couple of times above it, but we ended up closing pretty much right on the R3 level. Here's our intraday chart, where in the initial overnight session, we were pretty much flat. The futures, this was interesting because they didn't really see much of a change, but before the market opened, that's when we started to see some strength in the futures. That was carried over into the cash session, and now we're pretty much flat with the initial overnight session. This is also positive, where we have the green line on top, the red line's on bottom, so growth, at least on an intraday basis, even though these are on different scales, the blue line, growth, is outperforming. Here's the ratio between the two, showing that growth did outperform value, and it was positive. So we saw a little bit of a pullback here, but now we're starting to see more of an upward trend, and that is more positive for the indexes to be able to go higher. Keeping an eye on small caps, and this is kind of a area of maybe a hidden gem. We're not really seeing that action in the index when you look up on top, but we are seeing growth really continuing. This is the third day now where we've seen growth really outperform value for the small caps. And then the mid caps also starting to break out. They've been a little bit more stronger as we've been going through this time. They're in a more uptrend. They weren't as range bound as the small caps were. And so this is starting to go up as well, even though we're not really breaking out yet as far as the index is concerned. Here's our end of day information when we look at growth versus value, where growth was up, value was just barely up. And for the mid caps, growth was up more than value. Small caps, growth was up, where value ended up being down. The center area, these are the ETFs that go with these different areas of the market. And we're also seeing some improvement with our S&P growth to value ratio. After declining, it's now starting to go back up. We're also seeing more of a longer term upward move. However, we're also in a longer term downtrend when we look at this ratio. And here's another growth to value ratio where we're breaking out and looking stronger. We're above all the lines in the rainbow, but we still have not come back to this all-time high yet. So that's a little bit of a negative divergence, but the fact that this is improving is encouraging. And we're keeping an eye on discretionary versus staples, where we did tick up with the ratio on the bottom, but we're not breaking out yet. So that's still a negative divergence here. And then watching our trend, this is the intermediate term ADX, where it's just really ever so slightly starting to turn back up above the moving average. When it goes above the moving average, that means the trend is getting stronger. One more above 20, that means that we're in a trend, and the green line's on top, so that means we are positive. It's a little bit more pronounced in the short-term chart, which only stands to reason because it calculates faster. We're turning up a little bit more above the moving average. The green line's on top, and we're also above 20. Volume did pick back up a little bit. We were back above average. This is rolling over a little bit since we had Tuesday was a below volume day. Here's sentiment. Here's the latest reading of the Investors Intelligence. This is a sentiment gauge. I'm going to try to include this more since I have more direct access to it now. This is suggesting that we're getting extreme positive when it comes to sentiment. We're above this 3 level. Now, we could go a lot higher than we have right now. You can see other times when we went a lot higher than this, but this is just something to be aware of. The Ulster Index ticking down just a little bit and showing that there's not a lot of fear. With the update, we declined with the VIX, with the line chart, as well as the bar chart. We actually went up a little bit with the volatility of the VIX. It picked up with the bar chart and the line chart. We ticked down with the equity put call ratio when looking at the daily chart, but we're still going up with the 5 period. That's more negative. We want to eventually see this turn and start to go down if we're going to remain positive on things. And we're starting to come down after getting this extreme reading. This is the VIX to S&P 500 correlation. We spiked up and now we're coming down. This typically is negative for the market if you looked at other times when we saw readings like this. Now we could turn and go back up, or if this really starts to come back down, this might actually be the opposite kind of signal from what we usually see. Here's another chart. We're still in this red area with the skew index. We're coming down, but we're not out of the red area. We've spent the last 3 to 4 trading days up in this extreme area where the market is anticipating some kind of a big move. Just one possible scenario. It's probably not going to play out this way, but if we have an upward move in Friday's session, we get above that 5,000 level, all kinds of buy orders, sell orders, economic headlines are all going to come out. And then is that going to turn and have things come back down? Probably won't happen like that, but just if we come up with these scenarios ahead of time, not saying that we're right, we just say, okay, this is one possible thing that could happen. And then we see that played out, and then we'll adjust and modify that as we find that we need to change things along the way. Here's our advanced decline line studies. We're still going back up based on price, but we're seeing a little bit of a negative divergence based on volume. We're looking a little stronger with the price than we are with the volume right now. We're still declining with our 5 period new highs, new lows study, even though we saw a real expansion of the new highs and a contraction a bit of the new lows. And we're still declining with our 10 period. So it's going to take another day or two for this to show some more improvement. We're going to need to see some follow through to the upside. We're positive with our advanced decline ratio, and this is holding up for right now. The accumulation distribution, which tries to measure what the smart money is doing, and that is looking positive. Another smart money indicator is the Chaikin money flow, which is also positive and showing some improvement, and the Chaikin oscillator. Now we're getting up to this red level, which is kind of our initial extreme positive area. We get really extreme if we get up to this green line. But we're seeing another, because the mega caps did better, we produced a little bit of a negative divergence intraday here, where the S&P is setting a new all-time high, where we declined with the NYSE advanced decline line. So when we look at all of our advanced decline lines, we actually turned down a little bit with the common stock on the NYSE. We were up with the S&P, showed a little bit of an improvement with the mid caps, and we declined with the small caps. So we're seeing a contradiction across the board here. Here's the daily chart where we broke above this pivot level. And like I keep saying, we've set another new all-time high, but we're still under that 5,000 level. We did tick up with volume. We're slightly above the moving average. The Williams percent are still extreme positive, the CCI 14 and the CCI 20. Not all of our suspects, but a number of them in the short term are showing up as being extreme positive, but they still have more room to run to the upside. We did show some improvement with our 20, 50, and 200-day moving average study. The force index is above the midpoint and advancing, and the midpoint's now starting to go back up. That's positive. We're still extreme positive in the short term, intermediate short term, and long short term. And for those of you that are new to the videos, this is a further subdivision of the short term time frame. That's why I say short term, intermediate short term, and long short term. We're getting extreme with our standard deviations chart. We were right on the border before. Now we're starting to come up here. We're actually at the high end of the +3 standard deviations channel. Intermediate term, we're still looking positive here with the balance of power. We're positive with the go, no-go system with the dark blue bars. We're positive with the highest high value. The TTM squeeze is switched back yesterday to being more positive. Now it continues to be positive. We're turning down just a little bit with the ease of movement, but we're still above zero. We saw a little bit of reaction from the Arun indicator. That's going up, and that's positive. But here's another more short to intermediate term negative divergence. We did show some improvement with the McClellan oscillator for the S&P, but we're still below zero. So when we look at the summation index, because we're below zero with the McClellan oscillator, we're seeing the price continue to decline. We're also flattening out, but still kind of declining based on volume. We're also seeing this negative divergence in the broader market with the NYSE McClellan oscillator. We were pretty much flat, and we are below zero. So when that's below zero, the summation index based on price declines, and we're also declining a little bit faster based on volume. This is a little more positive with the Swenlin trading oscillator. We were negative yesterday because we were dropping below zero. We're starting to come back above zero now based on price, and we're just about at the midpoint based on volume. And here's our oscillators where we're still extreme positive, and we're starting to just barely break out above the moving average. But when you break it out looking at price, we're still declining, and we're right on top of the moving average looking at volume. Nothing extreme on this chart after about a month of it being that way. We saw some improvement with the PMOs that are rising, ticking back up slightly with the buy signals, and still continuing to come down with the PMOs that are above zero. And we continue, actually, we've switched back over to being positive with the Elder's Impulse system for the S&P. We had been neutral for the last 2 trading days. The parabolic SAR is still positive with the dots underneath. We're turning back up ever so slightly with the slope oscillator. This is our shortest term oscillator, and it's going just a little bit above its moving average. But at the same time, it's still extreme positive when it's above this green line. But it can run higher than that. The MACD is actually looking a little more positive. We're going back above the moving average. It's not necessarily extreme right now. So looking at all of our oscillators where we have the slope looking extreme and showing some improvement, we're right on the moving average with the TSI. Those are our 2 short-term oscillators. Then we drop over to the intermediate term oscillators where we're looking good with the MACD, a little bit of an improvement with the PPO and the PMO. And then we're still going up in our with our longer term oscillators, the TRIX and the KST. We're still above all the plotted moving averages in our moving average tree. As long as we keep going up, that will be the case, and we'll see these lines continue to flatten out and go up. This is a little bit positive here. I was pointing this out in yesterday's video that we were below 70 and declining. Well, we ticked back up with the bullish percent index for the S&P. But we're still declining with the bullish percent index for the NYSE. However, we're still above 50. And we're still coming down with the NASDAQ 100 bullish percent index, but we're still above 70. The money flow index, which had gone a little bit extreme positive, just did a little more of that in Wednesday's session. The ultimate oscillator actually ticked down just a little bit, but it's still above 50. The vortex rolling over just a little bit, but the green line is well on top here. And we're starting to get extreme with the RSI 14 as well as the RSI 9, but we could still go higher than this. On balance volume, turn back up, and we're above the advancing moving average. We tick back up. This is another thing I was pointing out yesterday, where we were really starting to come down with our moving average studies, but we ticked up with the 200 and the 50-period moving average. Now we want to see some follow through from here. The Copic curve continues to be positive. We're pretty much flat with the Sean trend meter, so we're not extreme positive. We're just kind of extreme positive. The boom indicator, we're getting kind of far away from the 20-period moving average and the 50-period moving average, and we are showing some improvement with the 200-day moving average. This indicator is continuing to go up. When we look at the trend, we're still looking good with the Heiken Ashi. That's in an uptrend. The Kegi turned back up with the black bar, so that is positive. The Renko has redrawn to look more positive, and the 3-line break is also looking positive. We're back to looking at the long-term charts with our 150 and 200-period moving average studies. We're coming extreme with the 150 as well as the 200. After we had dropped slightly down below this, now they're back on the list. Keeping an eye on the indexes where the S&P did outperform the equal weight index. It's not as pronounced when looking at this chart, but when this ratio goes up, that means the mega caps are outperforming. And here's another newer chart, which is kind of an inverse of logic. You read this going up, and when this is going down, that means they're confirming each other. I was playing around with designing a little bit different chart here, but I'm not quite happy with what I've come up with yet. We're seeing this going down. That means that the mega caps continue to outperform when we look at the ratio. The Dow is just barely set a new all-time high, just a little bit, but we're running into this pivot point here, this R1 level, which it's already acted as resistance once. It may be acting as resistance again, but we switch back over to positive when we look at the diamonds, and we're coming up above this R1 level for the NASDAQ. That's pretty encouraging to break through this pivot point. Back in 2023, these pivot points really caused some headaches along the way. The fact that we can break above this, at least for right now, is more encouraging. And we're still in no man's land with the NASDAQ, but it would be nice if we could get back to this previous all-time high. But we're still right at the pivot point here with the R1. Again, another potential headache. We're looking a little better with the NASDAQ. The NASDAQ 100 could be hitting overhead resistance. But we've switched over to positive from being neutral with the QQQs. And we're still, not, the momentum is just kind of going sideways. It's turning up just a little bit. So you see a bit of an improvement, but we want to see this really turn and start to go back up for the momentum for the NASDAQ 100 to be more positive. The small caps, they ended up being down, and we're still battling below the 50-day moving average. And we have gone from being negative to neutral back to negative again with the small caps when looking at the Elder's Impulse system. We're still dealing with the 50-day moving average with the Russell 2000 small caps. We turned down a little bit with the RSI. Longer term, we're still in an uptrend, but shorter term with the momentum, we are in a decline. And the mid caps, we're still kind of chopping more or less sideways, but we're still above this pivot point and in a longer term uptrend. And we switched over to positive with the Elder's Impulse system when looking at the mid caps. The FANG index set another new all-time high because these are the mega cap stocks. And the financial sector ended up being up 0.75%. So that's still hanging in there for right now. But when we look at this New York Community Bank, it's just tanked down. But then as it was really going down, eventually folks were like, okay, I made enough money here by shorting this stock. Now I need to buy to get out of this position. And that ended up bouncing the price back up. And you can see this massive increase in volume. That's not so much the story for us. We know this is going on at New York Community Bank. What we're worried about is, are other banks going to start to come in the news that are having similar problems? The dollar ended up being down slightly, even though in the after hours session it was up, but we're still in a longer term uptrend or downtrend here. We were up slightly with the 10-year based on yield. We were down slightly with the 10-year based on price. And then looking at our growth to value ratios, not really seeing a big improvement between the Qs and the S&P. It's still back down to its moving average. Ticked up just a little bit, but we're still below a declining moving average when we compare discretionary to the S&P. But when you look at large cap growth to large cap value, we are showing some more improvement there. So with the large caps, mid caps, and even more pronounced with the small caps, we are seeing growth outperforming value. We're still extreme positive, even though we're coming down slightly. We're still above this extreme reading with the 10-day average of the S&P 500, highs minus the lows. We're still positive with the highs minus the lows study for the broad market. We're continuing to go up with our S&P to utilities ratio, which could continue to give support to the S&P. And we're declining again with our staples to S&P 500 ratio as we've been going down in the bigger picture. Now we've been declining here, which also often supports the S&P. So what's our outlook for Thursday? We're still positive. We still have to keep this idea in the back of our mind. Is weakness beginning to develop? Especially if we cross above that 5,000 level. What's going to happen after that? So I'll be watching that closely to see how price behaves if we even get to that point. We're going to get weekly jobless claims and wholesale inventories. Weekly jobless claims will probably be the big report of the day. We're keeping an eye on the geopolitical events. And then we won't have any economic reports coming out in Friday's session. Looking at seasonality, we're neutral to positive with the Dow, where we're just flat out positive with the S&P and NASDAQ. So we have that going for us for right now. We're also looking pretty good seasonally when we look when we have an up January, how do things go there? So that's looking positive. This is also looking positive when we're in February now. This is the composite that they created. We're actually above that, above the seasonal average. And we're still in this area. It's kind of hard to pick out just where we're at. What I've been pointing out in this chart is that when we get to the middle part of February into about the middle part of March, that may be seasonally anyway, where we typically see some weakness. That we're also seeing that in this chart. When the current president is running for re-election, we see some strength in the early part of February and then some weakness going about into the middle of March. February ends up being the most negative month when we're in an election year, but it's part of the best 6 months altogether. And we'll be in Thursday's session, which tends to be more positive based on what happened in 2023. We will be on the 6th trading day of the month, where we see a little bit of weakness here with the green dashed line for the S&P during an election year. Our scenarios really can't go with the down one yet. We're seeing these things under the surface, but until we see it confirmed by price, we really can't go in that direction. So we still go with the upward trend because we are positive. We're not necessarily going with the sideways trend right now because we're starting to turn back up above the moving averages, which suggests a strengthening trend, but both the short and intermediate term indicators are above 20. So the warning signs, the risk on is not doing much. The equity put call ratio, we need to see that turn down and stay going down. Our oscillators, we're still getting a bit of a mixed picture there, even though they're a little bit more positive now. We're still seeing this negative divergence between the McClellan oscillators and the summation indexes. We want to see that improve. That's short to intermediate term. The small caps and the mid caps, they're still negatively diverging from the S&P. That's longer term, that longer term chart that I showed yesterday. The transport's not showing that because that's quite long term now. believe me, I'm watching that every day. And if that really shows some improvement, I'll be bringing those charts back. We're still wondering about the momentum for the NASDAQ 100. Positive signs. This is encouraging. We're seeing growth with the small, mid caps, and large caps really continue to improve. Can that continue? And then some of our oscillators are positive, so that's why they're on both slides. The parabolic SAR and the vortex charts are positive. The bullish percent index, it hasn't crossed below 70 yet. It's extreme, but that it is still positive. The Copic curve is positive, and small and mid cap growth are starting to break out a little bit. We're still kind of in that range to a degree, but if you think back to the charts I showed there, we're seeing some improvement in that area. The financial sector is positive for right now. So we're positive, but we still have to wonder, is weakness developing? Okay, and that's what we're asking in the short term, the intermediate term, the long term, and I didn't put it on here. We're actually becoming more overbought again with our longer term moving averages. Thank you. I really hope you found this helpful. Have a very good day, and I will talk to you in the next video.